Now, what I'm about to share in this video is an opportunity that I myself missed out on. Here's the part that a lot of people aren't actually aware of. And so that gives you up to 32 years of runway where you are receiving up to £1,000 from the government annually. That is free money. If you're in the UK, you most likely will attest to what I'm about to say. I am struggling to remember a time in the recent past where things have been this painful. I mean, economically painful, financially painful. Every single person is feeling the pinch. And I remember being at work during the last Great Recession, which was around 2007 to 2009. And I just don't remember things being this bad. And oftentimes when I am watching the news or I'm reading a new article about one of the Chancellor's latest great ideas, I literally have to check Google Maps to make sure I'm still situated in the UK. Everything we have been given, not really given because pay tax, everything we've been given is being clawed back by the government, and it's getting worse and worse every single year. And I'm sure that you have seen tons of videos online from people talking about leaving the UK. We're losing talent and capital at such a fast pace. The government has to pay attention at some point. But it really does seem like in order to plug this £20 billion hole, everything is being thrown at us all at once. And what's more is that the government has said it will increase spending. Now, when the government increases spending, what happens? Inflation goes up. When inflation goes up, interest rates follow. And so, needless to say, the next few years are going to be very interesting. And this is why I dislike leaving money on the table. It hurts my soul. For that reason, whatever you can claim within the constraints of the law and regulations, go ahead and do it. A warm welcome to my channel, and hello and welcome to all of my new subscribers. I could just give all of you a great big hug. If you're new here, my name is Jumoke, and I retired from my 9-to-5 in my 30s and now live off of my investments. On this channel, I share my journey into early retirement, and I also talk about personal finance, investing, wealth creation, as well as self-improvement. If that sounds interesting to you, do not forget to subscribe. If you aren't already subscribed, hit the notification bell so you don't miss any of my new videos. Now, what I'm about to share in this video is an opportunity that I myself missed out on, and that's because it was introduced in 2017, whereas I purchased the relevant asset around 10 years before that. Now, imagine this. You put £4,000 into a savings account and the government matches that amount with £1,000. And if you do this every year, you get £1,000 from the government. That sounds a little bit too good to be true, right? Well, it's real and it's called a LISA, a lifetime ISA. But before you jump in, there are a few catches and a few conditions you need to be aware of. So in this video, I am going to break down exactly how a LISA or a lifetime ISA works, who it's for, as well as the benefits and the pitfalls you need to know. So stick around till the end because this is a very powerful tool if used correctly, and I wouldn't want you to make the costly mistakes that some people do. Now, I'm currently prepping my niece on her wealth creation journey, and I'm also sharing with her a lot of the things I wish I knew at her age and some of the opportunities I missed out on, such as a lifetime ISA. And so I wanted to share this video in the hopes that it really helps an individual out there who is in the privileged position to really leverage this powerful tool. A government-backed savings account designed specifically to help young people who are looking to buy their first home or perhaps saving towards retirement. LISAs were introduced in 2017, which unfortunately for me meant that I missed out on the opportunity because I purchased my property 10 years prior. So here's how a LISA works. You can deposit up to £4,000 and the government will give you a 25% bonus on whatever amount you've deposited during the tax year, meaning a potential extra £1,000 a year. That is free money, and you'll be hard-pressed to find a savings account where you get a guaranteed 25% uplift. But there is a catch, and here it is. You can only use a LISA for two reasons. Number one, if you are purchasing your first home, and number two, if you're saving for retirement. Use it for anything else, you will get penalized, and we'll talk about that later in the video. Here is my disclaimer. I am not giving financial advice or tax advice. I will always recommend that you speak to an independent financial advisor who can walk you through your personal scenario, your personal financial standing, and advise you on a bespoke solution tailored to your specific needs. The LISA is perfect for two groups of individuals. Number one, first-time home buyers, and number two, long-term retirement savers. Here's the part that a lot of people aren't actually aware of, even if they've heard about a LISA. If you're aged between 18 to 39, you are eligible to open a LISA, and you can contribute to it every single year until you are 50 years old. And so that gives you up to 32 years of runway where you are receiving up to £1,000 from the government annually. And if you're planning to buy your first property over the next few years, this really could be a game changer in terms of helping you with the equity required. And as I mentioned or ranted about at the start of this video, we all know how incredibly challenging it is financially at the moment. And although interest rates have come down from their recent high levels, they are still relatively high compared to the last 10 to 12 years, for example. Owning a house is becoming increasingly challenging for a lot of people. And so for that reason, if home ownership isn't on your radar, a LISA can still be a powerful tool towards saving for retirement. And this is a point I need to highlight. This isn't for short-term savings. If you require access to the funds at an earlier stage than 60, you will pay a penalty. But there is one scenario under which you are permitted to withdraw from your LISA, and I'll talk about that when I talk about the catches and conditions you need to be aware of. Number one, you get a 25% government bonus on your contributions. Number two, a LISA offers tax-free growth. Now, whether you opt for a cash LISA or a shares and stock LISA, your money appreciates and grows tax-free. Number three, it is ideal for first-time home buyers. If you're buying a home under £450,000, a LISA could massively boost your deposit. If you are buying a home with someone else who has a LISA account, you can both leverage or use your contributions towards your deposit. However, you must both be first-time buyers and you must meet the conditions I will share a little bit later. And number five, a LISA is an alternative to a pension. For example, for self-employed individuals or those who want extra savings towards retirement, it can be a very useful alternative or indeed a supplement to a pension. So far, I think you will agree that this sounds very doable if you have the right mindset and the capital to allocate. However, there are some significant catches or downsides you need to be aware of. The withdrawal penalty. If you withdraw for any other reasons than buying your first home or retirement, you will be slapped with a 25% penalty, which means you can actually lose some of your original contributions. Any withdrawals within the first 12 months of funding your LISA will incur a 25% government withdrawal charge, which means you could get less than you paid in. So here's an example, and this is only an example. Please do not get anchored on these figures. If you withdraw £1,250 from a LISA that has a government bonus of £250, you will be charged £312 spot 50 in penalty charges. Number three is the £450,000 property price cap. Unfortunately, if you're buying a property that is more than £450,000, you cannot use your LISA penalty-free. If you try, you will face a penalty of 25%. Number four, strict access rules. Unlike other savings accounts, you cannot dip into your LISA for emergencies. And so when you commit to a LISA, you need to use what we call patient capital. There is one scenario under which you are allowed early access, and unfortunately, it's quite a morbid one. In a scenario where the LISA holder is terminally ill and has less than 12 months to live. Number five is investment risks. If you opt for a stocks and shares as opposed to a cash LISA, it means that your capital is, of course, exposed to fluctuations in financial markets as with other investments, and so you will see a fluctuation in the value of your account over time. Whereas with a cash ISA, your capital grows by the amount you invest every year plus your government bonus. The property must be located in the UK. You must be a first-time buyer. You must buy a property at least 12 months after your first deposit into your LISA. You must use a conveyancer or a solicitor to act for you in the purchase. And this one will sting a little bit for those who don't like debt. You must be buying with a mortgage. Yes. Your lifetime ISA allowance of £4,000 counts towards your broader ISA allowance of £20,000. If you take advantage of the maximum allowance amount of £4,000 within your LISA, you only have £16,000 to allocate within an ISA. How do you get started? It's fairly straightforward. You need to be aged between 18 and 39. You can choose between a cash LISA, which is safer and offers you sort of fixed interest savings, or you can choose a stocks and shares LISA, which offers potentially higher growth, but of course comes with increased risk. Next thing to do would be to compare providers and make a choice. There are different banks and different investment platforms that offer different savings rates as well as different fees. So be sure to choose a provider that works best for you. If you fall into any of these 4 categories, you probably should avoid a LISA if you're not sure about buying a property or even saving towards retirement. If you might need the funds for emergencies or before the age of 60. If your home budget or the property price is above £450,000. And lastly, if you have a strong pension already set up and you want some flexibility. Again, this is because the funds in the LISA won't be accessible without a penalty before the age of 60. And if you are seriously considering buying a new home, a LISA could be a game changer when it comes to your deposits. But please remember, do not rush in without understanding the risks and considering the conditions I've mentioned in this video. And just like that, my dear friends, we have come to the end of another video. If you have any questions, please drop them in the comment section and I will get to as many of them as I possibly can. I'll see you in the next video. Thanks for watching. Bye for now.